Hello, everybody. This is John Sider, your host with the Olympus Wealth Strategies podcast, where we take your finances to great heights. I am very honored and thankful that I've got one of my best friends here with me today, great businessman as well, Matthew Brown. Matthew, he's going to give some information about himself, but he's got a very large insurance agency. He helps a lot of people, him and his team do, and very thankful to have him here today.
Man, I appreciate it. Thank you for bringing me. This is awesome. I'm very proud of you.
Thank you.
Very proud of you.
Well, I've learned a lot from you. So tell everybody kind of a little bit who you are, and day in the life of Matthew Brown.
Well, the day in the life of Matthew Brown is hectic.
Yeah.
Chaos is the main word there. But, man, born and raised Arkansas. I grew up in Pickens, Arkansas, which is a cotton farm in southeast Arkansas. Typical Arkansas boy, football, baseball, farming. My whole family farms, and I did the whole pilgrimage up to University of Arkansas. Go Hogs! I mean, there's no other option for us. So
Woo Pig Suey.
Absolutely, we live and breathe it.
Well, tell us a little bit about your family dynamic at home.
Oh man, I've got a wife who's way smarter than I am. And I adore my wife. You know her personally. She's brilliant. She really is, and just a beautiful soul. And
salt of the earth.
Yeah, very much so. And I got two kids, Nora and Lawson. And Nora is I say she's either going to be a CEO of a major company or a leader of a prison gang. Either one, it could be in her path. But that's my job to make sure that doesn't happen. Lawson, very intelligent. Lawson is very mild mannered. Loves the sports, loves the Yankees. Me and him, I'm riding with him. I don't understand why, because we're a football family, but he loves baseball. And so Lawson's got a bright future ahead of him, really does.
Well, and for our listeners, as far as Matthew professionally, and I want to tie into his personal, how much his personal life has impacted his business, but professionally, you own the Brown Agency, which is Farmers Insurance. Yeah,
so, I mean, we've kind of transitioned to more of a wholesale brokerage. We represent hundreds of carriers now. Our main brokerage, of course, yes, is Farmers, and that's who I started with a very long time ago. I think we'll be coming up 19, 20 years now. It's not
started from somebody's back office broom closet, basically.
Yeah, her name was Gail Graves. I loved her to death. She's an amazing woman. Gave me my shot, and I didn't have an office. I didn't even have a computer. I showed up first day of work, and I had a Yellow Book notepad, who I still work on that Yellow Book notepad. And I was in the back of her office, and it just kind of grew from there. Opened up different branches. Right now we've got about 11. July 1st, we'll have 12 coming soon to Heber Springs. So we're looking forward to that. Merging with an agency up there, and I've got a couple in Texas, and that's just what we're doing.
Well, you guys have dominated the market, and I think for a lot of reasons. But one thing I want to tell everybody that really stood out, I met Matthew when I moved here 4 years ago, and I was asking him about how he's been able to succeed, and he'll shed some better light on that than I can. But one thing that you said was, in all of my employee contracts, I have a clause that says if you miss anything related to your family, and you gave the example of, kids' graduations or their baseball games or their soccer games or, someone's wedding or funeral, obviously the, big things, or even the small stuff.
You're fired.
You're fired.
Immediately.
Because you put such a premium on, hey, the work is always there, but these moments aren't.
No, I mean, just yesterday I had one of a key piece to our service team. She was out because her child was on field day at her elementary school.
God, those are a blast from the past.
I'm too competitive. I would, three-legged race, I'm winning that. Let's go. But yeah, she was off all day, and it doesn't count against her. But my point to the whole thing, it's one page in my contract, and it literally says, if you miss anything for your family because you were working. Now, we want to put that into context.
Right.
People, let's face it, people will try to take advantage of you. My people don't, because they respect it.
Right.
And
it's so rare. Right.
And they've seen
the thought of, hey, I can take off, or one of my employees can take off for field day, right? Or to go get a half day to go watch, my son's kindergarten graduation.
Absolutely.
Right. That's things that I would imagine within your office and the growth of all the people you've hired, creates a sense of loyalty and a sense of hard work and appreciation for you looking out for them,
yeah,
their family.
Too many people that own a business think that they're the business. You're not the business.
Yeah.
It's the people, our clients, my employees. And I hate the word boss. We don't even use the word boss in my office.
I think it's a horrible word. You either have leaders or you have dictators.
Correct. And so in that one page, it strictly states if you miss anything for your kids or your family because you were working, don't come back tomorrow. You're fired. I want you to be in the community. I want you to be at those events because that breeds other people.
Yeah.
And the word you just said earlier with loyalty. And I think holistically in life itself, if you don't have loyalty to something or someone, you don't have shit.
Yeah.
You have nothing. There's nothing that you have if you have no loyalty to something.
I agree. If you can't stand for something, then who are you?
Oh, I agree.
So do you think that's just one isolated example, but do you think that has led to your success from starting in someone's back office closet with a yellow notepad to having the largest agency in the state of Arkansas? And honestly, you're spread out with clients that go well beyond the state of Arkansas.
Yeah. I mean, I think there's a lot of truth to that statement, but relationship building is the key to business. And my dad, I grew up on a cotton farm. And if you know any farmers out there, I'm very partial to agriculture. So that family and that sector of business are the salt of the earth. If they tell you this is what's going to happen,
their word is their bond.
Exactly. They don't need a contract. If they shake your hand, that's what's going to happen. Now, we could get into scenarios where it didn't happen, like claims. Not all claims are going to go the way people assume them to go.
It's also in the hands of the adjuster to some extent.
Correct. In policy wording. But, you as a person, if I tell you this is where I'm going to be at this time, I give you my word. I'll be there. And that's the way I treat every employee. If I bring a young kid in like Cameron, 15 years old, he started working for me, just odd jobs here and there. He's 24 now. He's worked for 9 years. He's an agent, handles millions of dollars of deals. And, I gave him my word that I'd provide. And that's what I'm going to do.
And he's thriving.
He's thriving. He's doing well.
Everyone on your team is. And I think that's something to be said about the environment that you're in.
Yeah.
If people are continually growing, I think that highlights, instead of just all these empty platitudes about these companies say, oh, we have great culture. Well, how about you just look at the people, right? Instead of the executive team saying we have great culture, let's take a look at the people and see what they've done, if they're happy, if they're growing, and let that speak to the culture.
I use the CAR method on that. I tell people when I pull into an agency that I'm either going to buy or something, I want to look at the vehicle that the owner's buying compared to the vehicles that his employees are driving. Now, granted, there's a lot of different factors in there, but if the employees are driving up in newer vehicles and they're happy and they're laughing and they're having a good time, then more than likely that's going to be a good buy.
Yeah.
They've got a culture that I just need to bring them into me. But when you mention culture, I mean, what is it? I want to ask the business, what is your culture? Because a lot of people say, hey, we love our culture, but what is it?
People can't define it.
Yeah, what is it? I want to know. And they just can't do it.
Well, and I can say this, outside of our friendship, even, the small policy Aubrey and I have with you guys, right?
Matter.
You have made us feel like we're your top policy, and we're one of thousands of clients that you're responsible for serving. But you and your team have made us feel like we are the premier client every time we reach out or call on. Are you guys proactively reaching out to us saying, hey, here's another solution. Here's something that you could do, just as education. You provide that great education to allow us to be able to make an informed decision.
By far, one of the key components to that is a gentleman here from Arkansas, has a massive agency. Everybody knows him, but he wrote a book. I look up to him, never met him before. I've been listed on charts with him, Arkansas Democrat, Soiree Magazine, so forth. Greg Hatcher.
Yeah.
Greg Hatcher wrote, the book about service.
Outrageous service.
And yeah, but if you really home in on what he's saying there, it's not your clients, it's not your people, it is how do you service them from start to finish. Mm-hmm. And my dad always told me growing up, you treat someone with $1 that's paying you $1 the same as someone's paying you $1 million.
That's right. And speaks to your character.
Correct. Well, you talk about character. He also had another statement. He said, and I think our world needs more of it in today's society. Don't judge a man by the color of his skin, but by the character in his heart. Mm-hmm. And that speaks volumes, period.
Well, talking about you guys being such great educators to your clients, let's kind of get into some education for the listeners today. One thing I hear all the time, I'm sure you hear it 10 million times more than I do, is annual premiums, right? Yeah. Annual premiums, annual premiums, right? And every time, hopefully people are going to understand, insurance heavily ties into financial planning. Mm-hmm. And maybe tell us why annual premiums at a high level are going up and maybe some root causes of that.
No, I think your listeners need to hear the facts.
Yeah.
Insurance carriers, and I'm not going to just home in on one insurance carrier. It's different in today's world. Annual premiums are going up due to a multitude of factors. We could home on like the storms, right. The weather pattern. Let's face it. I mean, look at what's happened in our area over, say, the past 2 months. I mean, it's been tornadoes, wind, hail. And
there's a reason why all Arkansas filers can file and pay taxes not until early November because of all the flooding.
Correct. But it goes even deeper than that. Because insurance definition is a pool of risk. Mm-hmm. So when the carriers are displaced out through multiple states, you got to think we're only focused in on this one little area. And what the statement I hear most is, well, I haven't had a claim in 4 years. Right. But you live on a road and there may be 5 other houses
claims all around you.
And so loss ratio has played a major factor. And you started charting that back in probably about 2021, 2022. You started seeing that loss ratio get above that threshold. So 1 and 1 for every dollar I bring in, how much do I pay out? And so when you started seeing loss ratios in 120s, 130s, I mean, we've seen them in the 140s all the way up to 170 on a carrier. That is going to affect that rate increase that is filed by, that carrier.
Can some of it, especially for property owners out there, can some of that be tied to, whether we agree with valuations or not, can some of that be tied to the, especially post-COVID, valuations and prices of
homes today? Gosh, yes. I can give you a prime example. I insured a house in, I want to say it was 2016, 2017. I think the reconstruction cost in the house was around $220, $225, somewhere around there. The house just sold, and the new people buying this home called our agency, and I had to sign off on it. And I looked it up. 2016, 2017, $225.
Okay.
It was here in Jacksonville, actually. I just had to insure that house for $330,000.
$100,000 more.
Well, what do you think the premium did, John?
Had to go up?
It did. And well, the guy that owns the house is only paying X. Why is it this now? I mean, sheer valuation.
Right.
And then you take in the weather. That
more risk for the insurance company.
Correct.
They're insuring a $350,000 home as opposed to a $250,000 home.
Mm-hmm. And so I don't really look at it as, I tell my agents that work for me, you don't represent the carrier, but you do. Mm-hmm. You represent the client.
Right.
So if you can do things ethically and honesty and educate them on the coverages, then you did your job. Fiduciarily, you spoke the truth. Well, frankly, if someone's not going to do it, they're not going to work for me long.
Right. Yeah. Well, one thing I always get, whether it's in the mail or my phone gets blown up, and I know my friends do too, is people call to quote me, especially on auto insurance.
Oh, yeah.
And what I'm always shocked about is they'll say, well, I can get this for this price for you. And it's a great teaser, right? I think, wow, that's a lot cheaper. Yeah. But then they send me a quote, and I always laugh with you about it because they always send me the Arkansas state minimums, which is 25, 50, 25 for bodily injury, accident, occurrence.
Garbage.
And maybe can you tell us there's a reason why there's a state minimum, right? And every driver legally has to have auto insurance, but a state minimum versus maybe a realistic threshold of coverage for auto.
100%. And let's start at the beginning for this, because this is a major hot topic. 25, 50, 25 on your bodily injury and property damage limits is garbage. And I'm
you're asking for a lawsuit, right?
You're opening yourself up. So let's take someone like yourself. Let's use an example. Owner of an investment company, owns a nice home, married. You have assets. Those assets should be protected in the event that you are liable at fault in an auto accident. That's the topic we're on right now.
And thousands, tens of thousands, I don't even know, hundreds of thousands of those happen on a daily basis.
Oh,
right?
Yeah. Massive. But, you can't give a direct number because every situation is different. But if you look at, say, going the next one up, 50, 150, so 50,000, 100,000, the cost difference there, really minute in the scheme of things. And I think everybody, and hopefully the listeners, my clients or not my clients, I'd love for you to be my client because you will get this full service. You need to look at that, because you go out here, and this is an example I use to people. If I ran a stop sign, it's an accident. I don't want to hurt nobody.
No.
But what if I do? And what if it's your child? Is $50,000 going to stop you from suing me?
Not a chance.
Not a chance. So they need to weigh that into consideration here.
In today's age, right? Whether it's
the lawsuit volumes are going up.
But you talk about cost of things, right? You go to the hospital and you go to the ER, you're admitted. You're not walking out of there with some $500 bill, right?
No.
You're talking thousands, tens of thousands, maybe six figures in medical expenses. Property damage, right? Everything's, I think, kind of at the onset of how we talk about annual premiums, everything's more expensive.
Yeah.
And so to think that the minimum threshold is adequate insurance is opening yourself up for problems.
Well, and then people, they'll call the office all the time because I have a full service team, and I ask them on our Monday morning meetings, what was the hot topic that you heard from clients? Well, why am I paying this much? I think you turn that around and go, do you have adequate coverage?
Right.
Because let's face it, a brand new pickup truck today, what's the average cost of a pickup truck? 45, 50,000?
A lot more than it was a few years ago.
Yeah, a lot more. So you take that in consideration, and medical, there's so many factors here. It's just rule of thumb. I think everybody should have the highest limits they can afford. Uninsured, underinsured motorists, a lot of times overlooked because a lot of people don't understand it. If somebody hits you and they don't have insurance, that's where that coverage kicks in. Or they do have insurance, but it's not enough to cover the bill. That's where that kicks in. So you want to make sure those are heightened. And then, assets. You own a home, you got a checking account, you got a pension, you got a retirement. We want to protect those. And the only way to do that, in my opinion, is making sure those coverages are of eligibility for an umbrella.
So let's talk about that, right? As we're on the topic of liability, tell our listeners what is an umbrella policy and why is it important?
Well, frankly, think of it as an umbrella. You open the umbrella up, you put all your assets up under that umbrella, and what's it do? It protects you from the rain.
Yep.
Rain can be a lawsuit. It could be you're at fault. You're liable. I really think umbrella is the number one policy outside of owning your own life insurance.
So let's take it in this context. Let's use the example of a step up from the state minimums. You have 50, 150. You get into an accident, you cause bodily harm, and let's say that the medical bills for that person and everything else associated with that is $300,000. How does an umbrella start to kick in if someone has an umbrella policy? Let's say $1 million umbrella policy, and somebody exceeded their bodily harm limits.
Well, so umbrella is not a medical policy, for one.
Right.
Kind of off on that statement. But the umbrella comes into play when you are served. I'll give you a great example. I had a client that the child got in a car accident. She was deemed at fault. The lady injured her toe. I'll say her toe. You want to know how much they were suing them for? For disruption of their life, mental anguish. It It was $900,000. Of course, the
It's an
claim.
expensive tow.
Yeah, very expensive right tow, I guess. But they served them. An attorney picked it up, served them. You know, you get into that situation, you want to make sure you've got a policy there that can stop this or at least help you out monetarily.
Right.
And that's where that umbrella policy kicked in. You know, a lot of different carriers have eligibility requirements. I'll use, you know, some of your major ones want to see that you have 250, 500 on the bodily injury property damage. That makes you eligible for the umbrella. An umbrella goes up in millions. 1, 2, 3.
They don't want you to basically have the state minimums and then throw the rest of your liability on an umbrella policy. Correct. When you were kind of, I hate to use the word lazy, but you kind of wanted to kind of skate the system by getting the absolute bare minimum. But hey, once I know the bare minimum's exceeded, I get an umbrella policy where it's like, hey, no, we want to see a certain amount of actual coverage you're having before we will make you eligible to get this additional liability policy.
I still think everybody should have one. Because you're seeing, you know, lawsuits go up and more frequent. So yeah, umbrella is where everybody should be looking.
All right, Matthew. So let's talk about property and casualty. It's storm season here in Arkansas, right? And my God, since I moved here, right, we've had tornadoes, we've had floods, we've had strong winds, we've had microbursts, we have all these things. Maybe talk about where some blind spots or pitfalls are at when it comes to P&C insurance. And the first thing that I think of, and I know you deal with so much more, but the first thing I think of is, all right, strong winds, hail, rain, whatever, I have an issue with my roof.
Yeah.
If I've got, for example, a home that's got a 20-year-old roof, wind and hail comes and just beats the heck out of it, I need to get a new roof. I think, oh, I've got a 30-year roof. I'm going to call Matthew Brown and his team. I'm going to file a claim. I'm going to pay my deductible, which is pretty minimal, and I'm going to get a brand spanking new roof. Is that the case?
Not the case.
Okay.
You know, what do they say? Nothing ever stays the same. Mm-hmm. And that has been 100% facts in the P&C market, especially on roofs, because it's a hot topic. So a lot of carriers have changed their thought process on roof, and they should. You think of it this way. You have a roof that's probably taken multiple damages over the years, and you just let it set, or let's say you don't, you know, look at your property very often. 30 years down the road, should we pay for a brand new roof? Now, most people would be like, yeah, 100, but insurance is for profit.
Right.
So
when we talk about higher loss ratios.
Yeah. Oh my gosh. Yeah. Let's yeah. That's definitely throwing in the factor. But what's changed, and a lot of people don't ever read their deck pages that they get or their renewal pages. They don't ever read it. And the agents, in my opinion, some of them are not doing their job by reaching out to their existing clients. A review is not in a way, a lot of people look at it as a review, like when some of my girls call, because I have a retention team. And that's all they do is they're looking at numbers and thresholds and see of getting people in the door to review what they have, because deductibles have changed.
Right.
Arkansas, you're starting to see it more and more, is the percentage deductibles on standard homes, like just your average home.
So tell me what that means.
And I'll just use one example there. It's usually a 1-2 ratio, 1% all peril and 2% wind and hail. So if you have a $100,000 house, 1%, you have $1,000 deductible, 2% on wind or hail claim. So let's take the average. We just talked about how the value of a home has gone up. Mm-hmm. Let's say it's a $300,000 house. Now you got a $3,000 deductible for like fire, theft, things of that nature. A $6,000 deductible on wind or hail.
And when people think, oh, well, or especially if my home has continually increased, right? And you guys are talking to them, you're, making sure coverage is adequate. If I've got a 1-2%, I might think, oh, well, hey, I'm good. I'm paying Matthew Brown, or not Matthew Brown. I'm paying the insurance carrier, $1,000, couple $1,000 for this claim. When in reality, the storm rolls through and hits the house, it might be several thousands of dollars where I need to be financially prepared for that.
Oh, and it goes even further than that. Is you go off a loss settlement. Like, is your home replacement cost value or actual cash value?
Let's talk about that.
Okay.
What does that mean? Because I think that your team does a great job of explaining that, making sure you guys get the people in the right situation for their needs. But a lot of people, they just get shoved from their insurance agent. They just get shoved this statement, hey, sign here, here's your policy, we're done.
We're good.
They don't know what the difference of that is.
No.
That's huge.
Yeah, I mean, so I tell people like you're getting a quote. Of course, we quote multiple carriers. And let's say the average quote's coming in at $2,000, and then you get one that's $1,300.
Mm-hmm.
Well,
it looks attractive.
It looks great. But what's really the meat and bones to this? So what you'll see a replacement cost on the dwelling, but actual cash value or scheduled payment on the personal property. A lot of people don't get told. I tell my agents, dumb it down for them. Speak to them like you're speaking to them walking down the street.
If you can't teach it in their language, you don't know it.
You don't know it. So I tell people, if I could cut the roof off your house and dump everything out, that would be considered personal property. Of course, other things would be considered there. And let's say a couch costs, $5,000. Let's just use that figure. And you bought it in January and you have actual cash value on your personal property, loss settlement, and your home burns down in December and you put the couch on there. I paid $5,000 for it. And then they decide, well, you've used that couch for a year, 2, 3, 4, whatever number you want to put on, however long you've owned that couch. Well, now we're only going to pay you $1,000. And I tell them, close your eyes and imagine them doing that through your whole house.
Like the analogy of you drive the car off the lot.
It goes down.
That $50,000 truck goes to 40, probably right, not too long after you drive it. And the next thing you know, 3 years later, right, you go to try to sell that car or turn that car in and trade it in. It's not the $50,000 truck, but you don't want to expose yourself where you have a claim. Your $5,000 couch, you're getting $500 for.
A rule of thumb, loss settlement and what you want to see, professionally, dwelling, replacement costs, personal property, replacement costs, roof. And you want to know what I just had a claim due to the windstorms come through. Fences.
Oh, yeah.
A fence. So you can put replacement costs or actual cash value on a fence. You better have replacement costs. The cost of that fence in a subdivision, so you can think of a plot in a subdivision, that fence was like $7,000.
I believe it.
It's crazy.
Yeah. It's things are just expensive, right? Whether it's labor, materials, everything.
Well, and then you get into the home endorsement. So rule of thumb, what I want to see on endorsement, backup, sewer and drain, and I want to make sure that that's not the standard $5,000. Because let's face it, if water backs up through the pipes and causes damage, it's going to be over $5,000. So, you want to see 10, 15, metal marring.
And usually that stuff you don't notice till you get back home from work.
Yeah, that's correct. It's never going to happen.
The damage has gone wild.
Yeah. But you want to make sure, if I was a constituent, if I'm a consumer and I am looking for home insurance or just any insurance in general, if my agent is not explaining every little detail, that should be a red flag.
Yeah.
And I get we live in a microwave society. They want it right now. And as we try to go through the coverages with them, they're ready to get out. They got somewhere else to be. Just tell me where to sign. Take the time. Slow down. This is important, and they should.
And you're doing your duty to tell them, hey, this really impacts you because when you have a claim, more than likely when, not if, you're going to be calling me, and I want to make sure that I did my fiduciary duty to explain all this to you, and I'm recommending this based on everything you've told me.
Yeah, you're dead on with that.
Well, another topic for insurance that I think gets vastly overlooked in society is life insurance.
Oh yeah.
Now, a lot of people that I sit down with, some of them have adequate coverage, and I'm sure like you, when you meet with your customers and clients, but a lot of people will tell me, well, John, I have a policy through work, and I'm going to say 9 times out of 10, it's usually 1 times their salary. Now, let's just use an easy example for me.
Great that you have that.
Right. Great that you have it. But let's say like you and Samantha, right? You guys are a family of 4, and let's say if a salary was $100,000, is your workplace policy adequate life insurance?
No. So when I have my own life department, that Kendall does very well.
Very sharp.
MDRT, very smart with numbers. And she asked one question. That's it. who holds your life insurance outside of work? And then she shuts up. She lets you drive that conversation, because if you cannot answer that, you're already below the threshold by far.
Yeah.
By far, there's no question. If you don't own your own outside of work, you better. Because look at what happened in COVID. People lost their jobs. Mm-hmm. They lost their benefits. So what's part of the benefit package?
Life insurance.
Correct. And when it's gone and you get that letter saying, hey, you can keep your life insurance, but now it's at an obtained age. Mm-hmm. So you started working for them for 30, you got let go at 50. Now you've got to apply for life insurance at age 50.
You know, a lot of people that I talk to, they'll say something along these lines. Well, John, I've got $500,000 term life insurance policy, and my mortgage for the home is, that I've got left is $200,000. And, you know, if my wife pays off the home, you know, that cost is gone. She's got a few $100,000 left over. I take a step back and think, and let me know what, I'd love to know, you know, kind of what you and your team think, but I kind of look at life insurance. Obviously you're insuring the risk that your premature death, but also the risk that your family loses your income. And so I look at it as get the amount of life insurance that's reasonable, but that could be a replacement to your income. So if your wife or your spouse gets a check for $1 million or $2 million, and you talk to whether it's Olympus Wealth Strategies or your own trusted financial advisor, they can get that invested for you to replace and supplement the income that's lost, as opposed to immediately scrambling, thinking, I've got this lump sum to pay off some bills, then it's gone.
Well, I mean, if you just look, there's other aspects to it too. You know, vehicle loans, how much do you owe there? Your debt ratio. You got kids. You want them to go to college. You want them to trade school. You don't want to put them start them off on a bad situation.
Right.
But at first, she's going to ask that question. You know, who holds it outside of work? And they can't answer it. All right. Then we're gonna dumb it down.
Yeah.
How much you owe on your home? How much you owe on the house? How much, you know, student debt do you have? Because if one spouse is no longer with us anymore, it's on the other spouse. And you've seen it. I've seen it. You know, where they have to scurry around and sell the home, and you know,
fire sale.
It's a bad situation when it could have been fixed with a 30-minute conversation
and a pretty negligible premium.
Correct. Life insurance is not expensive. Now you get into table rating and things like that due to medical history. Of course, that's going to play a factor.
Sure.
And then there's all types of different policies. But for life insurance in general, you just need to own your own. Mm-hmm. Some is better than none.
And, you know, another guest that we had on the podcast, he has his own recruiting firm, right? Mm-hmm. Permanent placement firm. The amount of people who change jobs over time it's the standard in society today. So to rely on your employer alone for your life insurance coverage kind of sets you up to have a big gap in your financial plan.
Yeah, it's very disheartening. I like working. I have a couple of agents that handle, you know, more complex cases. I like working with the new home buyer, the young couple that's just getting started, because they're eager to learn.
Yeah,
they really are. Until I get to that question, because I was them at one point. I used to not have gray hair. You know, I thought I was invincible. No, we just don't need that. I get that more and more.
Or I'll get it next year.
Oh, I just had a couple in our main office, our main campus, and they brought in their baby. And they said no.
Is that not the reason to get life insurance?
Well, hey, you can lead a horse to the water, but you can't make them drink.
That's right.
And the husband's like, no. And I'm like, man, the premium on it, I think, was like $19 or a little bit over $20. And
less than one meal for him and his spouse. Disregard the baby for a second.
Yeah.
To go out to eat.
At lunch that he's probably eating at a fast food restaurant that doesn't really care and is probably hurting their body internally anyway.
Right.
What are you doing, man? What are you doing? They just bought a brand new house, and it's like you just went into debt here, and they just don't see it. They just don't see it. And then you could go into like young kids. What's the bet? Because nobody ever wants to talk about their children. Mm-hmm. We don't want to think about life insurance with children. But what if I told you could use that life insurance as a livable benefit while you're alive? Then they kind of perk up and they're like, what do you mean? And then when we show them, they say no. But the grandparents, they see it. They know it. They live it.
They've been through it.
They've been through it. They've lost friends. They've seen this happen. So my children, for example, and some of my close friends, you have a child, you're going to have an index universal life policy.
Well, I want to dive into that and how that can be a tool for not only wealth building and accessibility to, to tax-free cash, right? Yeah. But a lot of people that don't use your office, don't use your team, or just have been, walk down the street to their local, we won't name companies, but their local agent, and they get shoved different types of life insurance in their face without much explanation. And then we have to be the gatekeepers of education, right? Mm-hmm. Break it down just at a high level of you talked about the $20 a month, right? What is term insurance and what is permanent insurance? Yeah. So term insurance is just like the word term, 10, 20, 30 years. Mm-hmm. Outside of that 30 years, this is what they don't tell you. Does it renew? Yeah, it renews. Mm-hmm. It renews every year after the fact at obtainable age. So what do you think the premium's going to do? It's going to go up. And they even they show it to you in that package that, your policy binder. That the agent probably immediately stuffs in, closes it, and says, you're good to go. Here. Yeah. Thank you for buying. Yep. It shows you. And a lot of people don't know inside of a term, if you have the convertible portion of it, meaning you can convert that term to permanent, a whole life, an IUL, so forth. You can do that. But it's better to just get them all at once. I like diversification of someone's household. Let's get a large amount of term over here in the event something happens in these next 30 years. And that's the best bang for their buck. Right? Oh, absolutely. Yeah. But then let's back it up with like a smaller IUL. Mm-hmm. And that way you've got both. And if something happens, and as you grow, you can kind of manage that throughout. But man, I've seen some crazy IULs, crazy what it is doing for these kids. Like a 5-year-old having a GL Max IUL with, distributions at age 60. Man, they're getting a check for life-changing money. Yeah, life-changing money. And you said it earlier, tax-free withdrawal for X amount of years. In the investment world, kind of like another Roth IRA. Yeah, to an extent. So let's talk about the IUL because, we've talked about, different types of insurance, why you would want insurance. But as it comes to financial planning and how insurance is so married to financial planning. Oh, 100. A lot of people will say, all right, and people that are in blessed positions, right? And they go, well, Matthew or John, what else could I do, right? What other avenues can I take? And, you brought up the Index Universal Life or IUL. Can you explain to people how wealth can really get created and what that policy does? Yeah, I mean, so you put a certain death benefit figure on it. You can either keep it level or you can have it increasing, meaning the death value grows as long as the policy grows. But then you can put the biggest factor here is the withdrawals. You can say, hey, look, I'm going to start this on my kid at 5 years old, and at 55, 60, I want him or her to start taking the withdrawals from the cash value that's building up. Because basically these policies are invested in, S&P 500, Russell 2000, short-term, long-term fixed assets. So as that premium is being paid, there's also this little side bucket over here where that money is being invested for them through that policy. And so as that grows, then they can take the money when they get older. My kids have it. I think everybody that has a child and is in a financial situation where they can have a little exposable income, that's where they should start. Well, and when you talk about invested in some type of index to the market, right? Like the policy that Kendall just showed Aubrey and I. Yeah. I think it's important to highlight that when they think about their investment accounts with Olympus, right, they think about, okay, well, at a super high level, there can be times where we're up and there could be times where we're actually down or negative.
Okay.
But in this IUL, it could be where you're up, or depends upon on the policy that you get. It might be where you're up, or worst case scenario, if the S&P is down 20, you're just at zero.
Well, and there's a guaranteed value on the proposal. It shows you guaranteed. This is what's going to be in there if you fund that policy correctly, of course. Right. And 9 times out of 10, we see a lot of policies that come to us that are not funded properly. And, it's not their fault. It's not the client's fault.
Projections change, interest rates change, market expectations change.
But more importantly, they weren't explained.
Mm-hmm.
They didn't know. I hear that more and more than you can ever imagine. I didn't know. Well, nobody ever told me that. And that's sad.
Yeah.
For our industry.
That's the...
Because we're in a tough industry.
Oh,
the insurance market.
You and I are both in a very commoditized field, right? Mm-hmm. And I think what separates your agency and hopefully for people who have experienced Olympus, it's the service, it's the education, it's the true care to take the time to provide that fiduciary duty.
Oh, guaranteed. I mean, it's more important now than ever, in my opinion, because again, we live in that microwave side. They turn on TikTok and they think somebody on there knows what they're talking about. And hey, they may do.
Right.
They may be licensed. They may have been doing this for many years, but really and truly, are they giving you the service for you?
That's right.
Or is the service for them?
Or are they beholden, like you mentioned? Yes, Farmers is a brokerage to the Brown agency, but you've got the world at your fingertips to place people in different carriers. And it's not being beholden to one, whether it be an investment product or one insurance carrier. It's being able to say, hey, maybe this carrier was not the best one for you and this one is, or we can shop these and see what the best one comes back to be.
Yeah, of course. You want to do what's best for the client.
Yeah.
Because again, I tell my people, you don't represent the carrier, but you do. You represent the client.
Right.
And you're going to do what's right by them.
Well, Matthew, I appreciate all the time today.
Yeah, this is awesome.
Anything you want to leave our listeners with?
I mean, more personal than business, look at yourself. Make sure you're doing what you can do. And whoever is advising you, make sure they can articulate your situation. And above all else, love God.
Yeah. Wouldn't be possible without him.
No. I'm not afraid to admit that.
No, not at all. Well, Matthew, I appreciate the time today, my friend, as always. And everybody, we're so thankful for another successful podcast episode. We hope you got a lot out of this. It was great to get Matthew Brown in the podcast studio. And we're looking forward to connecting on the next podcast. Have a great day.
All opinions expressed on the podcast by the host and guests are solely their own opinions and do not reflect the opinion of Olympus Wealth Strategies or Uptick Partners, a registered investment advisor. This podcast is for educational purposes only and is not legal advice and should not be relied upon as a basis for any decisions. The investments discussed on this podcast may not be suitable for all investors and involve risks that should be carefully considered. Listeners are encouraged to consult with a qualified financial advisor before making any investment decisions. Certain investments may require specific investor qualifications, which not all individuals may meet. Any funds or companies discussed are not a recommendation or endorsement. Guests in the podcast might be actual clients, but are not compensated to be on the show, and their experiences are not representative of all relationships, which might differ substantially.